really short. So I noticed that, sometimes when we conduct our analysis, let me confirm I'm still recording. So sometimes when we conduct our analysis, we don't own price, right? Price can do what he wants, right? Price could come into our zone, go beyond the zone and start doing something else that is completely different from what I said during the analysis, right? So I felt, oh my God, sorry. So no audio, and I didn't know I've been talking to myself. My goodness. My goodness. All right. Thanks for pointing that out. I'll go all the way back again. I'll start again from the beginning. Right. So what I was saying, how about now? I hope you can hear me clearly now. I hope you can hear me clearly now. That person that messaged me just confirm, please? I think that was Mr. Who was that? I think that was Mr. Emmanuel. So kindly confirm if you can hear me now. Are you there, Mr. Emmanuel? Sorry about that. For whatever reason, my internet connection is just acting up today, but we'll make it work, right? Because another weekly analysis is going to be released tomorrow or Sunday. So I don't want us to miss out on these trading opportunities. All right. So let's go back to what I was talking about. So I was saying last week, my analysis on gold was to see price pull back into this area, then we'll sell back down to the zone. But look at what happened. See how price shot all the way up. All right. The most important thing as a trader is to have a bias. All right. At this time period, what do I want to do? Am I a buyer or a seller? Now, when I come on this weekly analysis, what I try to achieve is to give you my weekly bias. And again, on a single trade idea, or maybe on a particular asset class, you could be a buyer, I could be a seller. And if executed well, you can make money and I can make money too, depending on where we get in, if done properly, right? Now, would you say, even though I was bearish for the week, those that bought from here all the way to the upside didn't make money? Obviously did. But because I am bearish biased, at least that was what I wanted for the week, I'm going to look for areas that it's a bias for a reason. You have to be religious with your bias because that's what you want to see. That's what you want to execute. You get the point. So for me, I wanted to see price pull back into here. For those that watched the last weekly analysis, I wanted to see price pull back into here, then sell back to this downside. But what happened? Price pulled back into this area, broke above it. Now, for the purpose of today's video, which is how we actually execute on the for those that are students of the mentorship program, right? Whether price went up or down, we trade it, all right? But for those that just focus on analysis, let me show you how to take advantage of this. Now, I love engulfing candlesticks a lot. Now, when I pulls back into this zone, if it had given us that bearish engulfing candlestick, that would be a good place to get in. I could get in anyway, but just that I keep it simple so that you can understand properly. Let's use engulfing candle, bullish or bearish. So I was bearish biased. I would have loved to see a bearish candlestick from here. That didn't happen. Price continued higher. Because my weekly bias is bearish on gold, I am only interested in sells. Don't get me wrong, those that bought initially would obviously make money, right? But for the fact that I am bearish biased, that's what I want to see. So what do? If price breaks above my original zone, I look for the next zone because price actually moves within zones, right? You sell at resistance, you buy at spot. So I'm bearish bias. So I'm looking for resistance areas where I want to sell. So this was my preferred one on the analysis, which didn't play out. So when price broke above it, I was looking for the next area that I could sell from on 4-hour time frame. I now notice that, hey, around here, we have a resistance area. But happened? Price came there and continued higher. Now, when price broke above this current area here, let me just make sure that I am still on track. Okay, yeah, my screen is showing I'm audible. All right, let's go back. right? So price broke above that zone and continued higher. So I'm still looking for the next resistance that price is going to come. Why doing this? Because I have a bias. I'm bearish biased. You understand? So my bias is to sell. So I'm looking for areas where I want to sell from. So when price broke above this next resistance area, I quickly switched again. All right, where will be the next resistance I could sell from? Now on this 4-hour time frame, that next resistance that makes sense would have been this area here. But I was like, you know what? Let me look at the daily time frame and see maybe there's anything below that upper zone. So what did I do? I went to the daily time frame. Let's give it a moment to load up. Sorry, my internet connection is kind of slow today. So on the daily time frame, I now noticed that, hey, even though price rejected this upper region here of 3,500, the bulk of the price action took place around the body of this area here. Let me circle that area so that you can see what I'm talking about. Yes, because I like opens and close of candlestick. I really don't care about the wicks that much. Well, that's the topic for another day. So I put my zone, that line, on the body of that daily candle, because this is the daily time frame. I'm currently on the daily time frame. So I now went back. When I placed that line, which you can see, which is the 3,428.316 area. So when I did that, I now went back to the 4-hour time frame. I made sure that line is visible on the 4-hour time frame. Can you see that? So that's the next resistance. And you see that is the first area I got first. Or let me put it because the market is not for me alone, right? We got the first bearish engulfing candle. So that's your cue to get it. Usually when the engulfing is too big, you can use pending, maybe sell limit order so that you can have a tighter stop loss, blah, blah, blah. That's a topic for another day also. But let's look at how the bearish move, the first bearish move for the week, was triggered by that engulfing candle, right? So just a quick recap before I go to the next, pair. First area I wanted to see price respect. Price didn't respect there. Never given solid rejection. It continued. When it broke above it, I quickly looked for the next resistance area because my bias is a sell for the week. You understand? It's all about making money. Of course, those that were buying based on their own strategy, if executed properly, they're already making money. No doubt about that. Obviously, you can see that. But I switched to when I now plot the next resistance area, price didn't reject it. Price continued higher, right? Price continued higher. Broke above it. Then I went again and looked for the next resistance area, which was the one price eventually respected. And that was where we got the first significant bearish engulfing candle for the week. So even if you sold from here, because that was your bias, you will still make money. Of course, those that bought will make more, but you will still make money based on your bias. So I'll take questions real soon, but let me just take one more example. Let me use USD JPY. We'll still talk about the rest, right? But let me use USD JPY. USD JPY, for those that watched last week's analysis, you will remember that I even had a trend line. Let's not forget about that. Let's bring trend line. Let's place the trend line. Trend line was looking like this at the time. And based on my analysis, I was like, I would love to see price pull back into here, then before we buy to the upside. You understand? But notice how price came into that zone eventually. Notice how price came into that zone eventually. In this case, it gave a bullish engulfing candle. Remember, I said I'm going to give free tips. So let's use engulfing candles for this, right? Like I said in the mentorship program, whether price was going up or down, we know how to catch those trades. Okay? But based on those people just watch analysis, that's what I'm doing today's session, all right? So that you don't miss out on good trades. So see how price pulled back into that zone, eventually gave that bullish engulfing candle but didn't take off. Let's say you took the trade and you lost, right? What happens? You switch again, you quickly go again and be like, all right, where is the next area? Just like I did on gold, since price continued lower, and your bias, because my bias for the week on USD JPY was bullish. I didn't give plan A and plan B. Usually I give plan A, plan B, right? But I was so sure that price would go up, but I never knew that it would go this, like, pull back deep before taking off. You understand? But when that happens, you now want to look for the next obvious level that makes sense, because your bias for the week is a buy. So you bought here this time, it failed. You quickly, when price broke below it, you now want to quickly go back to your chart and plot another support level. You understand? And see how price reacts to that level when it comes there. Can you see that when price came back here, still gave that bullish engulfing candle? So whatever you lost here, you would have more than made it back to the upside. That's for USD JPY. I will still take another example. Let me do GBP JPY before I take questions. GBP JPY, I think price was trading around here. Yes, Friday, the 2nd of May, 2025. That was last Friday. I was like, I'd love to see price pull back into here before taking off. But price broke below that zone. As a matter of fact, came to this support area here. Gave that bullish engulfing candle. Again, can you see that? Because this is the next obvious support area. All this move to the upside. How do you even spot a good support or resistance? You are looking for areas that is responsible for a significant move in price in the market, right? So this area is a solid support area. So you can see when price came back there, see how it rejected. So price pulled back into that area, just like I talked about last trade, but never gave that engulfing candle. So no trade. So when price broke below it, of course, those selling will make money. Don't get me wrong, all right? But you are trading based on your bias, or based on the bias I gave during the weekly analysis. So when price broke below that initial zone, I would have loved to see price buy from, because I use simple market structure for that, right? So since price didn't respect that zone and the bias for the week remained bullish, then you are looking for the next obvious support level to buy from, which will be here. Can you see when price drops there? Can you see that bullish engulfing candle? If you take that trade, because it's definitely going to be a swing trade, right? Because your stop loss is going to be wide, your stop loss will be below that zone. I usually don't put my stop loss above a support. It doesn't make sense. It's a support for a reason. I mean, let's say you put your TP at this equal high here, right? If price hits there, that you've made like 4.7, almost 5% profit on one single trade within just 1 week. That's if you're risking 1%. That's 5% profit. You understand? So I will take questions now before I go to NAS. I think I split out perfectly, or let me say before I go to GBP and Euro USD, so that you can see how these things work. All right. So I think some hands are raised. I'm just okay. All the hands are down now. So if you have any question, please indicate by raising up your hand. Then I will allow you to speak. I notice all the hands are down now. Before I had about 5, 6, 7 hands raised. So if you have any questions so far, just tap on that hand icon. Okay. Mr. Chuku Eugene, you've been allowed to speak, Mr. Chuku. So please go ahead and unmute yourself and ask your question. Are you there, Mr. Chuku? In case you're speaking, we can't hear you, so you need to actually unmute to be able to speak. All right. So while we are waiting for Mr. Eugene, if you have any question, just indicate by raising up your hand, then I'll allow you to speak. All right. Since no hands, while we wait for Eugene, let's take the next one. I think let's look at NAS 100. So NAS 100 played out perfectly. So there's nothing to say there because wanted to see price, but I think price was trading around here. Yes, around here last Friday during the analysis. So price pulled back into this zone twice before taking off. So I think that played out okay. So there's nothing to talk about there. So let's go to GBP USD. GBP USD has even pulled back again. But anyways, remember my analysis last week on GBP USD was to see price break below here, pull back and sell off, or pull back from where price was at the time into here and sell off. Bottom line is I was bearish, right? But see how price pulled back. Okay, price never broke, right? It pulled back into give that bearish engulfing candle. Okay, let's assume that you got in. You got in at this bearish engulfing candle. You obviously would have lost the trade. But that's your bias, so you need to be religious with it. So that was the game plan. You wanted to get in. Price pulled back, gave a simple bearish engulfing candle on the 4-hour time frame. You got in. Unfortunately, when price pulled back, you lost. All right. It doesn't change the bias for the week because it's the weekly bias, right? It's a weekly analysis. So price pulls back into our weekly zone because this whole zone was plotted from the weekly time frame. If I go to the weekly time frame, you see the zone I'm talking about. You can see that zone. So, and that zone was plotted simply because historically price had rejected this zone to the downside significantly. So now that price is back there, we're expecting a reaction, and we just want to make money based off of that reaction, right? So that zone was plotted on the weekly time frame. So let's go back to the 4-hour time frame. So on that 4-hour time frame, the first plan was to see price break below here, give it a good pullback, then sell off. That didn't happen, obviously. Then the second option was to see price pull to this upper region and sell off, which price actually did respect. There was this solid rejection, painting this bearish engulfing candle, right? For me personally, I would enter at the close of this bearish engulfing candle and put my stop loss here because it's going to be too wide. So once this rule is met, I may place a pending order, like maybe a stop limit order, so that I can have a tighter stop loss. But whichever way, price obviously would have stopped you out. But when price pulled back into that weekly area, let's say you are just looking for a confirmation, a bearish engulfing candle as the sell confirmation, you would have gotten it here, right? So stop loss above where you got in, which should be maybe around above here, then you sell to the downside. At least this would have still given you a decent, or let me say my favorite 2-to-1. You understand? Even before this reversal, you get. So even though you lost the first one, let's say you risk 1% on funded accounts, let's say prop firm funded account, talking about funded accounts, watch out for my interview with Funded Next. I did an interview with them on the 5th of this month. That should be Tuesday or Wednesday. I can't remember vividly whether Tuesday or Wednesday. Was Tuesday. So I'll send out, I think I'll send it to the group, but they've not published the interview though, so I'll send it after today's class, so watch out for that. But anyways, back I was talking about, so on prop firms, funded accounts, I risk 1% per trade, and I love 2-to-1s a lot, like you already know. So you would have still made your 2-to-1 to the downside. The only one that was clumsy, which I clearly stated during that weekly analysis that I would not really look at, is Euro USD. Right? So Euro USD, I looked at the distance. I was like, if you watched my analysis, I was like, I won't really pay too much attention to Euro USD. But I still did the analysis anyway, and I was bearish, right? So see how this was the zone I wanted price to sell from the zone, but price did poke out. So another way to do this, okay, I didn't explain this when I was talking about the other pairs, but another way to do this is, for instance, on Euro USD, my bias was bearish, but price was bullish Monday, Tuesday, I think even up to Wednesday. So what I usually do is, where was that Friday's candle? I think this was the one. So from here, price pushed up, then gave us a new lower low for pullbacks. That didn't happen. We went for a deeper pullback, right? Gave us a lower high, equal high. This was the first lower low. Change in market structure that now aligns with your weekly bias on that pair. In this case, Euro USD. I was bearish, right? This is the first bearish change of market structure we had, right? Then the pullback using simple market structure. I think I have a video on that. I did that video. I can't remember. Maybe I'll tag it when I post this on YouTube after tonight's class, right? So price pulled back into this area, then sold off to this zone, still pull back into that area again, simple market structure, and now it is pointing lower. So you can either look for zones. Let's say you're bullish, price pulls back into my support zone. Let's say that it violates that zone and continued lower, you want to look for the next support zone and then wait for an engulfing candle. Execute. Alternatively, you can look for change in market structure. You understand? I think that will be a topic for another day, because I promise that today's class won't be too lengthy. So change in market structure. I think I'm still going to talk about, maybe next week, I'll talk about how to also take advantage of our weekly analysis using change in market structure. All right. And for those that already understand change in market structure, what I'm saying is, let's say I'm bearish biased for the week and price is initially bullish for the week. You're looking for the first change in market structure, preferably for me, I'll recommend on the 4 time frame. Then when price pulls back, after giving that change in market structure, when it pulls back, that's where you want to look for your execution, depending on what your confirmations look like. All right. So yeah, that will be all. If you have any question, just indicate by raising up your hand before I round up. Sir White, I see Sir White, you've been allowed to speak. Oh, okay, let me do that again. Sir White, please go ahead and ask your question. To be able to speak, you need to unmute your mic. Though you've been allowed to speak from here, but for you to be able to ask, yeah, go ahead, please. Can't hear you. Maybe you have to fix the mic. So there's no name here. I can see 4 eyeballs staring at me. So Mr. 4 eyeball,
Hello?
you've been allowed to speak. Yes, please tell us your name and where you're tuning in from, and then your question.
My name is Gabriel. I'm calling from from Ikeja. So I want to ask, why don't you consider the week of candlestick?
The week. Oh, okay.
When you are marking your zones.
Okay, no, it depends, right? It's not like like I said, like it's going to be a bulky topic if I'm going to talk about it. So when I plot my zone, of course I consider weeks. You understand? But this is weekly bias, right? So what I was talking about, I think I talked about this thing you're talking about on gold. Let's go back to that gold. So I was on the 4-hour time frame here, so I was hoping to see a pullback into this area based on my analysis into this area. Now that didn't happen. So price continued higher. So I was looking, since my bias is bearish, I was looking for the next resistance area I should sell from, which now happens to be here, obviously, because we can see multiple rejections historically from that area, right? But obviously, price never respected this. So I was looking for the next resistance area. So between these zones, between this weekly zone at the top here and this area, it's far from me, you know. So I felt like, all right, that is the next obvious resistance level. But since my weekly bias, because I so much trust my weekly bias here, so since my weekly bias is telling me that, hey, I should sell, and the time price was trading around here, it was already the end of Tuesday, right? Or let me even say around here, it was on Tuesday, yeah. So I was like, if price is still going to go bearish, this area to this area will be too far away. So let me look for an area that is still close at least. You understand? So what did I now do? Actually, before I go to the daily time frame, this is the week, sorry. So this was the initial rejection from there. So I was like, are you sure that 4-hour candlestick is going to make its way all the way to that top? I felt like, no, the chances of that happening is slim. It's possible, it's slim. So you know what? Let me go to the daily time frame. From 4-hour time frame, I went to the daily time frame. Then I noticed that, hey, the body is a good place because, yes, the wick poked out, but we have 2 daily candlesticks. At least the body of those daily candlesticks failed to break above that area where I put my line.
Okay.
Failed to break up. Yes. So, you know, the body, like if you go, you know, we have different types of charts here. We have the candlestick chart, we have the bar chart, we have the line chart. You understand? Now, when you go to the line chart doesn't show wicks because the wicks just represents the high and low of the candlestick. So, yes, so the body of this candlestick, we have on every candlestick, we have the open, we have the close, and the wicks represents the high and lows. You understand? So my own concern is the bodies of the candle. That's why when I conduct my weekly analysis, you will notice that when I'm plotting my zone, I usually like to touch the body before I move to the wick. The body is the top priority.
I noticed.
Yes, the body is my top priority because price, in most cases, respects the body. All right, look at where price bounced off from. Can you notice that all the bodies of the candlesticks are aligned? The wicks are irrelevant.
That's true.
You understand? Also notice here, where price also sold off in this area. You notice that this look at the body before the drop. If I even move it further left, you see another body here. So price cares about the bodies of candlesticks. So that's why sometimes when I'm plotting my zone, I'll say, hey, let me check the daily time frame. I usually like to look at the daily time frame for bodies a lot because I notice that price usually respects those daily bodies a lot. You understand? So, but that's a topic for another day though, because if I dive deep into this, we are going to be here for the next 2 hours.
All right, thank you. It's clear to me now. Thank you.
All right, you're welcome, sir. So, any other question? I see Mr. Sawhite's hand is raised again. Mr. Sawhite, yes, go ahead. This time you need to unmute yourself to speak. I think Sawhite disappeared. All right. I see Baraka Amos. So, Baraka Amos, you've been allowed to speak, so go ahead, unmute yourself and ask your question. Baraka Amos. So to be able to speak, you see that mic button there's this slash. Okay, I'm getting a question on WhatsApp. Let me see if it's from you guys. Yes, I think I am recording. Yes, I am. All right. Let's see. Mark of Dale. Isaac. Okay, let me take Mark of Dale first. So, Mark of Dale, please go ahead and ask your question, sir. You need to unmute to speak. All right. So, while we wait for Mark of Dale, let me just I'll try Sir White one more time.
Yes. Good evening, sir.
Good evening, sir. I can hear you now.
Sir, let me go straight to the question. Sir,
okay.
When you see 4 hours this candle, what is the name again? Evolving candle.
Yes.
Hello?
Yeah, I'm with you. I can hear you.
My problem here is after the close of that that's 4 hours candle, or maybe 1 hour candle, why trying to buy there, or maybe trying to see if the thing comes back again to bounce off, the trade may left you behind. maybe when you want to buy straight from there, the thing will still come back to hit your stop loss. So on which time frame, after seeing that engulfing candle on 4 hours, maybe resistance or the other way around, which entry is best to approach it? Because this has made me to lose so many trade, and to lost so many accounts when I use a fire brigade approach. Once I see the 4 hours engulfing, maybe I will buy from that. Thing may still go back to hit below that 4 hour before the thing continues, or when you are waiting for the thing to return back again, the thing will continue to move. Say even the week goes out. This is my question.
Okay.
Thank you.
Okay. I was even struggling to hear you, but I think I got your question clearly. So what happens is, first of all, when you say it hits your stop loss, do you have a bias? You understand that question you need to ask yourself. So what was your bias for the week? For me, I'm talking about my weekly analysis. I'm not talking about, I'm not here to teach maybe trade execution and stuff, but how to execute based on my analysis. Remember that. So if you can't just say, hey, you are trading, and when price comes into your zone, gives you a 4 hour and you just trade it. No, because if we even look at this, let's choose any of the JPY pairs. Let me look at USD JPY, for instance. When you look at USD JPY, like here we had a bearish engulfing candle. I don't know if you can see it. Let me point it out with an arrow.
Yes. I even look at that candle today. I've been
You
looking at
understand?
it to the come back then. Yeah.
Yeah. So you have a bearish engulfing candle. Now for me, I'm not going to sell there because I have a bias. So that bias is very important. What are you looking for? What direction are you looking for initially before you now go and start looking for the execution confirmation? Let me put it that way, the execution confirmation. You understand? So it's not because, hey, I talked about engulfing candles, then you're just looking for engulfing candles. Now, let's say, for instance, if my bias is bullish, right? If my bias is bullish and I get a bearish engulf at a resistance area, I'm not going to sell because that's not what I want. So you see, I am select because I have a bias. And that's why having a defined strategy is very, very important. All right. So just like I even said earlier, right? In our mentorship strategies, even when price was falling, we can still take advantage of that. So that's a different thing. Based on the analysis, my weekly analysis, and how to take advantage of it, I usually come with my weekly bias. I'll be like, hey, for this week, like I did last week on USD JPY, JPY, Euro USD, blah, blah. On USD JPY, my bias was I am bullish for the week. So you see, I have a bias. Now, if I get a bearish engulfing, I won't be buying because that is not my bias. You understand? So it is very, very important that you have a directional bias. And that is what you now draft, or let me say, tailor your execution on. So you get, so it's very important to have a defined bias. Okay, this is what I am a buyer. So if I see selling opportunities, I'm not selling because I am a buyer. You understand? So when you do that, yes, go ahead.
Please. Like this particular USD JPY, I was on it today. I saw that 4 hours engulfing candle. I know I wanted to buy, but
This
I was
one?
like, yes, this one. But
Okay.
I was expecting a pullback again to buy, but the thing continues to long hater skater. No pullback again for me to buy. And assuming I buy from that 4 hours, the stop loss will be too huge for me.
This one, right?
Yeah.
I agree with you. So you know why? The reason is, you see, that's the essence why I came up with today's session, right? You didn't buy at the right place. You bought late. You're buying late. Just imagine you are a bullish engulfing candle, which, to be honest, is happening at a 4 hour resistance area. Of course, just all notice that price will react to this zone. Even if you've been buying from here, yeah, and your target is up here, that's fine. But trust me, even if you buy from down here, it's going to be funny if you don't expect a mini pullback when price attempts a significant level on, even if on the same time frame, which in this case is the 4-hour time frame. This is a significant level on the 4-hour time frame. So if you're buying here and expecting not to see a pullback from here, then you are doing the wrong thing. You're expecting unrealistic, you're having unrealistic expectation in this case, because if you're trading based on this engulfing candle, your stop loss has to be far away. It doesn't even make sense to buy here, in my own opinion. It doesn't make sense because your stop loss will be out in the cold. Your stop loss will be out in the cold. So there are ways to do this, but today's session is not for that. Today's session is just you watch the analysis and price goes against you. Look for the next zone and the next zone and the next zone. Let's say, like I said, price should. I'm buying from here. See how I am buying at this zone that has been tested multiple times historically. If I want to bring this part in, you understand? Now that failed, I didn't put a zone in the middle of nowhere here. I didn't do that. I looked for the next significant area that makes sense. So you want to buy from significant, you don't just want to be buying in the middle of nowhere, right? So if you're doing that, you're definitely going to lose a lot. So buy at a safe zone. When you want to buy at support. When you want to sell at resistance or supply and demand for those that trade ICT and essence. You understand? You need to look for that valuable area to trade from.
Thank you, sir.
You're welcome, sir. So I'll take one more question before we call it a night. That's if I see hands raised. No hands. All right. So I believe, okay, I see Bosti. I think I'll take this last question. So yes, go ahead, Mr. Bosti. You've been allowed to speak. So just unmute and ask your question. You need to unmute in case you're speaking. I can't hear nothing. All right. So,
thank you.
You're welcome, sir. Go ahead, please.
Okay. Thank you for giving us this. I hope people will utilize it. I just want to ask, when you said it's either we wait for the market structure or bearish engulfing at the zone that you've been for your analysis, and then when we wait for the market structure, and then when we have a retest like the good example you did, when we have a retest, we didn't see just a rejection, so there's no bearish engulfing. Is it okay that we drop to the lower time frame to see the bearish engulfing before we take trade? Or is it that when it's rejected at the zone, that's we can just trade when we see rejection at our zone?
Yeah, I could say that, yes. So once you see that rejection, maybe using the engulfing candle, thank God on the typical example here, right? Once again, last week, price was trading around here, pulled back into my original zone because I wanted to see a buy from here. We got the engulfing candle, right? Obviously, it's a losing trade. It's a loss, right? Then we are looking for the next zone to buy from. Why? Why are we doing this? Because of the weekly buyer. So I think I would recommend that for those that are yet to find consistency, right? If you are yet to find consistency in your trading, I really don't recommend lower time frame, except if your strategy, like let's say for instance, like on the mentorship program now, there's a strategy that we trade on the 15 minutes time frame, right? I think you are unaware of that, Mr. Bosti. So you were part of the previous cohort, right? So that one we can trade on the 15 minutes time. Now that's a strategy on its own. That's a strategy on its own. You understand? But based on this analysis, I would recommend you stay on the 4-hour time frame for a higher, let me say, should I put it this way? Because when you go on the lower time frame, there's something I want to say specifically. Yes, the signal you generate on a higher time frame is more reliable than the signal you generate lower time frame, except if you have a backtest strategy on that lower time frame that has proven to be profitable over time. But if you're just starting out, right, I recommend that you stay on the higher time frame. Of course, you will get lesser amounts of trades, but at least it's going to be sustainable in terms of profitability compared to when you're on the 15 minutes time frame. Because take for instance, on this USD JPY that we got one engulfing candlestick happened to be a losing trade.
Yeah, I
on
think
15 minutes time frame. On the 15 minutes time frame, we probably would have gotten up to 5 engulfing candles around this place. Maybe you could have lost about 5 trades before price came to this lower zone and took off. So that's why it is important that I recommend that you stay on the 4-hour time frame from now. So that when you start finding consistency, you can start dropping down a little bit to spot some patterns that you can build upon.
So thank you so much. This should be we should wait for that engulfing. But at that zone, if there's market price action and there's no
let me even give you 2 options. Let me give you 2 options, right? You can wait for engulfing and execute based on that, or you can also wait for change in market structure.
Yeah,
you understand. You can wait for change in market structure. Now, that's why I said it's a different topic for another day. When you wait for a change in market structure, you can actually drop to the 15 minutes time frame. You understand? What I mean now is, let's take for instance, let me even use an arrow to draw this here. So price continued lower, even they didn't respect our first buy area. So continued lower, give us this bullish engulf candle here. Then continued higher, then pulled back into the body. See why I love bodies? Pull back into the body of that initial engulfing candle. So if we go to the 15 minutes time frame to look at this, you will see a change in market structure there. I'm sure I've not looked at this, but let's just look at it together in real time. Let's wait for the other parts to load up. All right, good. Now, if I plot a zone around where price broke out from, now look at this. You see, I'm on the 15 minutes time frame. After price had rejected that's our second buy area. See how price came into that area. That next area we plotted on the 4-hour time frame. Let me do it from the scratch again so that you understand. Let me use market structure to.
I understand. I understand what you're
saying. Okay. Now look at this rejection, the first rejection from our original zone, or let me say the second zone that was plotted along the way, came back equal low, then went on to give us the first higher high. Yeah, the first breakout. Market structure has changed. Look at the pullback, look at how it took off. So at this point, you can switch to the 15 minutes time frame when there's a change in market structure. Let me give you another example, like on Euro USD. So I want to show you when you don't want to be trading from that zone initially from the 15 minutes time frame because it can be misleading.
Yes.
So on Euro USD, let's go back to the 4-hour time frame on Euro USD because initially price was bullish here. So at the beginning of the week, then there was a change in market structure. So I think the week started around here. Look at this. There was a change in market structure here, but the pullback, we cannot see any rejection. You can see how price continued higher, created a new higher high, higher low, equal high. This was the first lower low we had. Now let's go to the 15 minutes time frame and time the pullback. Can you see the movement price now pulled back?
Yes.
You understand? Now, let's say you are looking for a bearish engulfing candlestick to execute on. You will get it around here, which is on this candle here, this particular one. So that's the moment I will recommend that you, if you want to execute on the 15 minutes time frame, wait for a change in market structure on the 4-hour time frame. So when you get that change of market structure, that in this case we are talking about a bearish scenario. So when price created a new lower low for the first time in a week, after price had gone against your analysis, let me say my analysis had gone against it. I was bearish buyer, but we were initially bullish. First change in market structure on the 4 time frame. We now want to anticipate a pullback. So that's the moment we can now switch to a 15 minutes time frame. But make sure you plot that possible pullback on the 4-hour time frame. But on the 15 minutes time frame, you can now on the 15 minutes time frame now you want to sell from that pullback is complete. On that zone you plotted on the 4-hour time frame, then you want to sell from there. But this requires a deeper explanation. I can't do this in today's session. So maybe
I understand. I've understand.
Right,
I've got the clarification. And then thank you. There's another thing you said, like if you plotted a zone and then we didn't see the confirmation, it broke through it. So we look for the next zone to maintain our bias. If you are selling, just keep selling at at the very point of interest. So I learned that today. And sorry to say this, I messaged you didn't reply my message. Your something. Yeah.
Oh, where? On group?
Telegram? No, not group. On your Telegram.
Okay, for better reply, I think for quicker response, I think you make use of WhatsApp. Just go to letstraighten.com. You see the WhatsApp icon. Click on that, and I think that will be faster because on Telegram there are lots of spammers and spammers.
Okay.
On Telegram, so there are so many Telegram messages I don't open, but for quicker response, you just make use of WhatsApp.
Okay, thank you.
So you're welcome, sir. All right, so that will be. I know I can still see some hands raised, but I'm so sorry. That's how far we can go today, so that the recording is not going to be it's already too lengthy. So. I want to appreciate everyone that tuned in, and just a reminder, our mentorship and next cohort is kicking off. Just visit letstraighten.com, and then you will see all the information needed. But by the way, if you tuned in late, make sure you revisit this video. In fact, if you even start from the beginning, I'll also recommend you come back and watch this video because these types of things you can't just grab everything at one go. You understand? So it's very important that you come back to rewatch the video so that you can catch up some things, that way it sticks. All right. So once again, thanks for everyone that took out time from your busy schedule to be a part of tonight's session. There will be another one next week. So I'll see you next week. All right. This video is going to be uploaded on Monday, not tomorrow, not Sunday, but it's going to be uploaded on Monday so that whatever analysis I make over the weekend, let's say the same thing happens next week, at least now you know how to take advantage of it. All right, so this video will be uploaded on Monday, so watch out for that. And if you need any information, any question, clarification, just go to letstraighten.com, use the WhatsApp icon to send me a message, and I'm going to respond. And please, when you send the message, don't just say hello. That hello, it's difficult to reply, right? I really don't have much time to say hello again. Then you say, how are you? I'll say, fine. I'll say, how are you too? When you just type, just go straight to the point. What's your question is about, what you need. So that way I know what you're talking about and the response is going to be delivered immediately. If not, I will just pass it on to my assistants and you can have a nice chat. Hello, how are you? And stuff. But if you want me to reply you quickly, just go straight to the point. All right. People do that a lot. They'll be like, hello. Just talk about what you want, like hello. I don't have time to say hello back and how are you? I'm fine. Just go straight to the point, all right? So that way it's easier for both of us. Anyways, thank you once again. I'll see you in the live session again next week. I don't think there's any serious. I'll check my calendar so that I'll know when to fit it. All right. So have a wonderful night rest and enjoy the rest of your day. Good night. Bye.